Hello, Vivian, are you there? Yes, so I'll share my notes. Advanced bookkeeping. So these are all the contents of our book. And today we are learning chapter 5, accruals and prepayment. Accruals and prepayments. So what this chapter is going to cover is adjustments. Adjustments made for accruals and prepayment of expenses and income in the financial statements at the year end. So these are basically adjustments. And these are done in the income, like they are done for accruals and prepayment of expenses and also for incomes in the financial statements. So financial statements, we know there are two financial statements, statement of profit or loss and also statement of financial position. So in this book throughout, we are going to learn the adjustments. Last week, we learned the adjustment about the stock, closing stock. And today we are going to do the adjustment, second adjustment for accruals and prepayment. So if these words sound new to you, so I'll explain you. Okay. So what is accrual? Accrual. Expenses charged against profit. These are the expenses charged against profit for the period, even though they have not yet been paid for. So there are some expenses during the year which were due to be paid but were not paid. When we pay for the expenses, then they come through the cash book. Like expenses are rent, electricity, gas, or wages, or so many expenses whatsoever. Whenever we pay these expenses, we charge through the cash book, like expense account debit, cash account credit, cash or bank account credit. But what about the expenses which were due to be paid but have not been paid? Some expenses are paid later. You do not pay in time. So the items may be like telephone expenses, pay as you go bill you get after the end of the month. So or sometimes some other bills you get at the end of the month. Electricity as well, like if it is the bills come, like for example, if the year is ending on 31st December, for December month, you may get the bill in January next year. So you have not paid it. So the accrual concept says that we should charge the December expenses in the accounts ending December. So even if you have not paid, but they were due to this year, so we must charge. So for that, we do an adjustment. So what we do, we actually find a approximate amount, because every month we pay bill. For example, if it is electricity or telephone, every month we may be paying some bill. So on the basis of previous expenses, we can estimate for this month. And on 31st December, we have to put those accrued expenses or due expenses in the account. Why we do so? This is because of this is a concept, like this is called accrual concept of accounting, whereby the accounting system says whatever expenses are related to the year, they must be showing into the accounts related to that year, so that we can show exact profit, correct profit for the year. Okay. So that is the purpose of this adjustment. Similar to accruals, there may be prepayment, like some expenses we pay in advance for the future period. For example, like it may be rent. Most of the landlords we charge the rent in advance. For example, for the month of January, you may pay rent in December itself, even if it is paid on 29th, 30th December, right? For the month of January. So it is still in advance. So suppose you paid the rent for January next year in this year. So our cash book will show the rent paid and bank account credited. So it means when we will be preparing the profit or loss account for this year, it will show more rent than paid. So therefore, accounting adjustment for prepayment is required, so that any payment in advance made should be deducted from this year's account and it should move to the next year account. So this is not called prepayment concept, it is called accrual concept, which we'll be learning in our further chapter number 8. We'll be learning about the rules of accounting. So one of the rule is accrual concept. Okay, and under that we have to do the adjustment for accruals and prepayments. So we are going to learn about it, how we will do it. So an accrual is an amount due in an accounting period which is unpaid at the end of that period. In the financial statements, accrued expenses are added to the expenses in the statement of profit or loss account. We learned in the previous chapters that we are going to do the extended trial balance, in which we have adjustment columns. So if the expense is accrued and we know about it, like we obviously estimate that on, say, if the year is ending 31st December, we'll estimate an accrued expense and will show in the extended trial balance. So we will be adding this to the expense and showing it as liability in the statement of financial position. Why it is added to expense? Because it is an expense. So to show the true profit, we should add this due expense in this P&L account. Also, because we have not paid this expense yet, so it is a liability for us. So we have to show this in the liability as well. So we'll see how we will show it. Here this is shown in table form, that accrued expense in the statement of profit or loss account, add to the expense in the financial position, add to the current liabilities. So we can say add to expense, and here add to current liability. This is a rule for accrued expense. So sometimes in the exam we are asked about the journal entry or adjustment entry for accrued expense. For example, at the end of the year, 31st December 2019, we will do an adjustment for accrued expense by making this journal entry. We will debit expense account and credit accrued expense account. So this is a new account we have seen here. We will open this new account and will make this entry. As I mentioned an example, that suppose electricity bill is just like say £150, which was for December 2019. We didn't pay that, so we will estimate this and we will say debit electricity expense £150 and credit accrued electricity account with £150. So this is the one journal entry at the end of the year. But then what we do, that in the next year, that is at the beginning of the next year, that is 1st January 2020, whatever date follows. If it is 31st March, it will be 1st April. So at the beginning of the next year, we reverse this entry. So what do you mean? We have debited expense, so we will credit the expense account, and because we have credited accrued expense account, so we will debit that. So why are we doing it? Because the expense is not yet paid. So when we will pay in the next year, then automatically an entry will come that expense account debit and bank account credit, right? So but that expense account is already gone in this year, so we should not have the impact of that here. Therefore this entry is reversed. So simply speaking, the adjustment entry for accrued expense is done in these two journal entries. One journal entry is done at the end of the year by saying debit expense, credit accrued expense account. It is liability. It goes into the statement of financial position. And expense account is going to the statement of P&L account. And the next day itself, which will be the beginning of the next year, we will reverse this entry. This is a rule. Okay. So this, if you understand this, then you will be able to understand other entries as well. Is there any question till here? Okay, so no question. All right, I'll go ahead. So what we are saying, this general entry is very important for exam point of view as well as for practical point of view as well. In your practical work, you may be required to do an adjustment entry at the end of the year for accrued expenses, and this will be the one. Okay, so this is like estimated expense, yes. Okay, when the actual bill comes next year, then we will straight away make the entry that electricity expense debit and credit the bank. So but this is like a notional entry. I can say that we have to do this debit expense, credit accrued expense, to show this as a liability that it is not being paid, and this is adding to the expense. And on the very next day, that is the next year, we reverse this entry. So this was for accrued expense. Similar to that is the prepayment of expense. Prepayment of expense. So I will like someone to read with me. Hello, who's there? Vivian is there as well. Hello, Vivian, are you there? Not here. Anita, are you there?
Yeah.
Okay. Can you just read this and then I will explain, so that you people are also, your people are also live, not sleeping.
Yeah.
Okay. All right. So prepayment of expense. As I explained about the accrued expense, so there can be prepayment, like we paid in advance. For example, rent is generally paid in advance, right?
Yeah.
So what is that? Can you read?
Yeah. A prepayment is a payment made in advance in the financial statement, prepaid expenses are deducted from the expenses account in the trial balance as an asset in the year statement of financial position.
Yeah. So the opposite of accrued. In the case of accrued expense, because it was due, we were adding to the expense. But here we have extra. So we deduct the amount. If we have paid the rent for January in December, then we will deduct that amount. Suppose £1,000 we paid in advance for January. It was not related to the year ending 31st December 2019. So what we'll do, we'll just deduct from the expense account in the, so not in the trial balance, in the statement of profit or loss.
Okay. So we will deduct the amount and then we will enter in the statement of profit or loss.
The deducted, like if you have paid during the year, like your rent is £1,000, okay, and you paid in this year £13,000 is the first year of your business. So you paid 13,000 because 1,000 you paid for January next year. So, but the rent for this year is 12,000. So we'll deduct 1,000 so that the profit or loss account shows only £12,000.
Okay.
So what we are deducting, £1,000. Whatever you have paid, if you have paid 13,000, then it's a normal entry that you will put the rent account debit and cash or bank account credit. So automatically the rent account will be showing 13,000. But I want to deduct because 1,000 relate to the next year. So we deduct from the expense account in the statement of P&L account and show this as an asset because this is our money we have paid in advance. We show this as an asset in the statement of financial position. And in table form, it looks like that. Prepayment expense in the statement of profit or loss, deduct from expense. And in statement of financial position, add to the current asset. And the journal entry for this will look like at the end of the year, we'll say credit expense account because generally expense is in debit. So we credit £1,000 and debit prepaid expense account £1,000. Similarly, followed with this entry is necessary. So whenever you are asked to do the adjustment, then you have to do both. Unless they're asking you adjustment at the end of the year is this, adjustment at the beginning of the year is this. So reversal of that. So credit expense account, debit prepaid expense account on at the end of the year, and at the beginning of the year, credit prepaid expense and debit expense account. It's just reversal of that. In the computerized software, some software do it automatic reversal because it is necessary. So then the third point comes accrual of income. So like accrued expenses are there, so there might be accrual of income, that some income was due. For example, we are landlord and we receive rent. Sorry, or like, okay, some other accrual of income can be like interest amount. Suppose we have some deposits and we have to receive interest. Interest is paid for the month of December, is paid in January. So it is accrued income. Interest was due for December, but it was paid to us in January next year. So we have to show this accrued income in our account. So accrual of income is accrued income, which is income accrued but unpaid in the financial year. So in the table format, we say accrued income, it will be added to the income because like interest income was receivable, but we didn't receive. So we will add in our profit or loss account for this financial year. And also in the financial position, we'll show this as an asset. Yeah. So then, so this we have like this, we have to just understand. If you have understanding, then we will not confuse. So journal entry for adjustment accrued income. Okay, can you read that? Yes, Anita, can you read it?
Yeah, okay. Yeah. Journal entry, adjustment entry for the accrued income at the end of the year, 31st December 2019, credit income account, debit accrued income account. At the beginning of the next year, 1st Jan 2020, reverse the above entry, credit accrued income account and debit income account.
When we just read that, then it sounds like confusing what is happening. But if we like apply our mind to each line, then it makes sense. So at the end of the accrued if we have any accrued income, like interest had to be received, but we didn't receive in our account, so then we are crediting income account. So we are increasing our income for this financial year. And then debiting this as an asset. Accrued income is an asset, while accrued expense is a liability. Accrued income is an asset, accrued expense is a liability.
Is a liability, yeah.
So because we have done this entry, so in the next year, first date, we will just reverse it. So debit income, credit accrued income account. All right. Similarly, there is prepayment of income as well. We have received the money in advance. Okay. So we have to deduct that from our accounts because we have to just show the amount related to this period. Now, what can be the prepayment of income? It may be like some professional fee might be received in advance, or it may be rent, like if you are a landlord, you may have received rent in advance. So then it is a prepayment of income. Income paid in advance for the next financial year. So we received the professional fee, which was due in January, we received in December, or we received rent early. Okay, so we have prepayment of income. So if it is prepayment of income, because the prepayment, so we have to deduct. We have received in advance, so we have to deduct from our income, right? And then this income we have received in advance is a kind of a liability for us because we'll have to pay back. So we say prepayment of expense is an asset, while prepayment of income is a liability. When we pay the expense in advance, it is our money. We paid in advance, so it is an asset. So what will be the journal entries for this prepayment, prepaid income? Can you see? Can you read that?
Journal entry, adjustment entry for prepaid income at the end of the year, 31st December 2019. Debit income account.
Why we are debiting? Because income account is generally credit. But to reduce the amount, we will have to debit the income account. Yeah, carry on.
And credit prepaid income account. So at the beginning of the next year, 1st Jan 2020, reverse the above entry, debit prepaid income account and credit income account.
Yeah, hope this is not confusing you people.
Yeah.
Yeah, if we have the understanding, then it is very clear. Okay. Any questions so far?
Because there are two entries we have to remember, like accruals and prepayment, and accrual income and prepayment income.
Yeah. Okay. So what we have learned is accruals of income or expenses. Similarly, prepayment of income or expenses. Right? Two things we have learned. Okay. Then going back. So in the exam, one thing is that you may be asked about the journal entries, any of these. And Other questions may come to calculate the amount. They'll give you some basis and they'll say that find out how much will be the accrued amount or how much will be the prepaid amount. So for that, for that simplicity, we prepare this kind of an expense account. And this format will be very useful for calculating the amount to be transferred to profit or loss account by after adding the accrued amount or accrued or prepaid amount. In this account, this type of account comes in the AAT exam. So they will like put the figures in statements, and you'll have to guess. You'll have to find out, is it the accrued amount or is a prepaid amount? Okay, and is it accrued is in the beginning or at the end? So suppose we have opening accrued amount, like from the previous year there was some accrual and then we reversed in this year. This is like, okay, I can put it like 1st January 2020. This is like new year. From the previous example, if we see, this is like 1st January 2000, opening accrued amount will be appearing on the credit side, because I said when you have accrued expense, then what we do, accrued expense debit and expense account debit and accrued expense credit. Okay, and in the beginning of the 1st January, we just reverse it. So if I go back in our notes, journal entry for accrued expense. If you see here, at the beginning of the year, we reverse the entry. It means we credited expense account, right? So on 1st of January, it was credited. All right. So now in this my draft account, this is what is shown. So sometimes in the question, you'll be given this amount as it is. So you have to find out in the expense account that where will it appear. So remember, it will appear on the credit side. Okay. So this is what we learned. On the other hand, if it was like it was not accrued amount, rather it was a prepaid amount. So either this will be there or this will be there. Either the expense may be accrued or it may be prepaid, right? For each expense, we may be preparing separate account. If it is electricity account, then we'll say electricity expense account, and in that either we will have accrued amount or prepaid amount, one thing. All right. So in the exam, you will find either you are given this figure or this figure. So in this draft, I have put both the figures. So like if it is showing you, sometimes they will just say opening balance on the credit side. So we will be knowing that this is the opening accrued amount. Okay, but if in the expense account it shows opening balance on the debit side, then we understand that this is opening prepaid amount. So this draft I generally give to our students to like put the figures on the right place. In the question, you'll be able to find out, is it accrued amount or prepaid amount, and is it on 1st of January or is it on 31st December. Okay, so generally this kind of question comes, they say that like in the opening balance, it was accrued or prepaid, one of these will be there. And on the end of the year, it was either prepaid or accrued, one of them may be there. Okay, so we will have to put two of these four figures, 1, 2, 3, 4. Out of these two figures, we may have to put. Sometimes you may find that they're having opening accrued amount and closing prepaid amount. Okay. So either I will say that this will be there or this will be there, one of them. Okay, so one of yellow will be there, one of green will be there. Okay, so we'll put them on the right side. Sometimes in the exam it may happen that these two things are coming on the same side. All right, so then we'll have to put them here on the same side, and we'll have to then what is this bank account showing? Bank account is showing like the actual amount paid for the expense. Right, so expense account paid, expense account debit, bank account credit. So this balancing figure will show us that how much will be going to the statement of profit or loss, which will be actually the expense related to this year. We'll be using this table for our numerical questions. Similar to this draft expense account, there is income account. Okay. So in this again, this figure is showing on 1st January 2020. Okay. And this is also on 1st January 2020. So either this will be there now. See, here is a prepaid expense, prepaid amount. Okay, for simplicity, accrued is in yellow. So here accrued is in yellow and this is prepaid is in green. So this thing should make sense to you. And this thing, they are in yellow. It's an income account, so they may ask you one of them. Right, so this is the year we are looking for. And if the income is received, then we say bank account debit, income account credit. So this figure will be available there. And this will be the balancing figure, which will show how much figure should appear into the statement of profit or loss account. Right. And one of them will be there. So like it will go either into the asset or liability. So if it is expense account, we say the closing accrued expense will be liability, closing prepaid will be asset, right? But this will be the opposite. So here, if it is closing accrued expense is liability, then closing accrued income is the closing accrued amount. Yeah, this is our income account. If we have prepaid income, then it is a liability because this money belongs to the next year or to someone else. But closing accrued income will be our asset because this amount was related to us. So these two tables you will have to remember, and you will see how quickly you will solve the questions. Okay, income and expenditure accounting. This is recording of the amount that should have been received and paid during an accounting period. Should have, it is saying should have. So we consider the accrued income and expense account. It's just a statement that if we are doing income and expenditure accounting in our accounts, the amount should be what we should have received, not what we have received, but we should have received, which is related to this period. Sometimes we make income and expenditure account, and sometimes we make receipts and payment account. So these two type of accountings are there normally. So that also we see in the rule of accounting chapter 8. Actually, all rules are put there, while they should have been segregated in each of the chapters. But well, for your understanding, we either do income and expenditure accounting, or we call that receipts and payment accounting. So receipts and payment accounting, recording of amount that should have been received and that should have been paid during the accounting period, without taking note of accounts and prepayment. Well, this is receipt and payment accounting. We do not consider the accruals and prepayments. It means that, like actual receipts, actual payments. Okay, like we use that for VAT accounting. Remember, in cash accounting, we may use receipts and payment accounting. But normally, everyone has to do income and expenditure accounting, where we have to show the accruals and prepayments. So this is the end of the slides, and then we will move to the book. Any questions so far in this? Anyone? You can type the question on Q&A, or
table was confusing.
or just unmute your button. Okay.
That table was
Yeah, this table we
confusing.
use
Yeah.
all the time. Of that table, like just try to understand like what I'm trying to show in this table is like this is a draft expense account which you may use like as a shortcut in exam. Okay, so you will be given one of these yellow figure and one of these green figure. They'll show you what was the opening balance, what was the closing. Sometimes you may have just one of these four.
Okay.
Like so, but normally in the business we have some accrued amount or prepaid amount for the expenses. Okay, either this will be there or this will be there. Similarly, either this will be there or this will be there. It's not that always two yellows and two greens will be there. No, it can be one yellow and one green, like anything. So we'll see when we come through the question, then you will see how it makes sense. But main thing is understanding the concept. Why are we doing accrual and prepayment adjustments? Okay. So let me open the book.